thanks everyone for coming. This is going to be a Twitter space to discuss Hashflow and Arbitrum and Hashflow's deployment on Arbitrum and give you a whole rundown of these projects and the space and maybe talk a little about scaling and dexes and all that kind of good stuff too. So maybe just to kick things off, do you guys want to give yourself some intros?
Sure. I think I'll start since I'm the first one to unmute. But my name is Victor, and I am one of the founders of Hashflow. I'm also serving as Chief Technology Officer, CTO. And yeah, I'm excited to be here, and I'm excited to be talking Hashflow, in particular Hashflow on Arbitrum.
Hey, I'm Steven. I'm one of the co-founders of Off-Chain Labs. Off-Chain Labs is a team building Arbitrum, and likewise excited to be here with Hashflow and tell you more about Arbitrum and explore the integration and how that will look as well.
Awesome. Actually, introduce myself. I'm Tom. I'm a partner at Dragonfly Capital. We're a crypto venture fund. We are investors in Hashflow and fans of Arbitrum, and we love L2s and scaling solutions overall. So excited to be doing this with you guys. I guess maybe just as a place to start, because I don't know, who else is in the crowd. I guess, Victor and Steven, do you guys want to both give a, explain it like I'm five overview of what you're working on and why it's important?
Sure. Oh, go for it, Victor.
Okay, I was trying to break the deadlock. But yeah, like I'll start here. Hashflow in its most simple form is a DeFi native RFQ DEX. So it's very similar to a lot of these centralized exchanges people have been using for a while. Our experience similar to your Uniswap, to your Matcha, to your 1inch terminal where you're requesting quotes and executing them. The sauce that we're using to actually make this experience possible, however, it's somewhat different from DEX for most of the DEXs because we don't use AMMs or automated market makers. Rather, we connect institutional market makers to traders directly. So institutional market makers would send cryptographically signed codes over to traders. And the reason we did this is because we managed to build a more capital efficient structure. We managed to protect people from MEV. We offer no slippage trades and as well as no impermanent loss for liquidity providers.
Hey, I'm Steven, co-founder of Off-Chain Labs, as I mentioned, and we're building Arbitrum. So what is Arbitrum? Arbitrum is a layer 2 scaling platform for Ethereum, and it basically enables you to transact with much lower fees and also much higher or much faster speed. So when you submit a transaction to Arbitrum, you'll get basically instant confirmation. Sort of feels like visiting a Web 2 page, visiting a website. As soon as you click, you'll basically get a confirmation. And also the fees are much lower than Ethereum, about 90 or 95% today. But the cool thing is that it's built on Ethereum, it's secured by Ethereum. So you get much lower fees, faster confirmation, and you don't have to compromise on the security of Ethereum. And we're excited to build out our platform. We have most of the biggest infrastructure providers on Ethereum are supporting Arbitrum, as well as lots of the top apps and some really, really up and coming great apps like Hashflow on our network. So it's a really, really, it's a mature ecosystem, but it's also an early ecosystem. We are 90 to 95% cheaper than Ethereum today, but that's continuing to, our fees are continuing to go down. And ultimately, we're focused on how to provide the best user experience to the most people and how do we bring the masses onto Ethereum in a way that's inclusive, that we can lower our fees, and by doing that, include more people, include more verticals and more type of apps, and really overall bring Ethereum to more and more users.
Very cool. Maybe, doubling down on that for, again, maybe folks who aren't as up to date on their, Ethereum development lore and history. I'm wondering if you can sort of talk a little bit about, what are the previous approaches to and existing, competitive approaches to scaling Ethereum, and why you think Arbitrum is a better solution than those. And Victor, I'm also curious, from your perspective, why have you guys decided to deploy on Arbitrum over other solutions?
Sure. So if you look like historically, there have been a bunch of attempts to scale blockchains, and actually Arbitrum. So I'll mention the history of Arbitrum. If you look, I always mention this, but it's one of my favorite things, so I'll do it again. If you go on YouTube and look for Arbitrum and look like for the oldest mention you'll find this video from 2015 from a Princeton course. It was like a fall 2014 course. So this was like January 2015. And it was the initial version of Arbitrum built out by a bunch of students led by Ed Felton, my co-founder. This is actually before I was involved in the project. I was actually in that class in a different capacity, but I wasn't working on this project at the time. And it was clear to us, and the reason why that date's interesting is because that predates Ethereum launch, right? So Ethereum launched July of that year, so 6 months or so later. And the reason we were working on this early on because it was clear to us that one of two things happens, right? Either the blockchain technology doesn't go anywhere, or it does hit adoption. And if it hits adoption, it was clear that the infrastructure at the time is not going to be able to support the mass demand that's going to be needed for that. And we didn't believe it was going to go away. So it was really the second one that was clear. And that's why the need for scaling smart contracts was very, very clear. And the history is, so Ed Felton, my co-founder, went off to the White House for a few years. And the project basically, was lie untouched for a little bit. And then when he came back in 2017, we really picked it up again and built it out in an academic context first, and then we spun it out into a company. In the time, there have been some other approaches as well. So people know about Plasma, for example, was one of the earlier attempts to scale Ethereum. And in a lot of ways, we've learned a lot from Plasma, and we've built on some of the learnings. And one of them was Plasma was actually a lot more. They were looking to do a lot more than we're doing today, even, right? So Plasma was looking to take all the data off chain, but also take the execution off chain. So really, Plasma was looking at like much cheaper transaction than we are today, but there were some significant problems with Plasma to achieve that. And we realized, hey, this thing called rollups can get us like 90% of the way there, and is actually much more achievable. Arbitrum existed before the term rollup existed, but it's sort of is a term that described what we had already been doing, and it was exciting when the sort of vocabulary caught up with what we're doing. But we're very excited today. We're known as an optimistic rollup, which is basically means that we build fraud proof. So the ELI 5. What do rollups do? How do we scale Ethereum? How do we manage to get the security of Ethereum, but also break across some of those scaling bounds? And it's really about the easiest way to think about it is about getting more mileage out of Ethereum. So Ethereum has a fixed capacity. How can we use that more efficiently? How can we compress what we're doing on Ethereum in a way that uses Ethereum's capacity and just compacts a lot more into it, and enables us to do more? And the basic variety, and this is something that applies to Arbitrum and all rollups, is we take execution off chain. So a transaction can be thought of in two ways. The transaction is basically zeros and ones, just a blob of data, but also it's the thing that it describes. It says, hey, add these two numbers or store this value. So how can we scale? We put all the transaction data on chain. We put that blob of data on chain, but we move that execution off chain. And in doing so, we're able to relieve the load on miners a lot. And now the question is, hey, but if you remove the execution off chain, and it's not being done by Ethereum miners, how do you get the security of Ethereum? And the key word there is proofs. What we do is we take it off chain, but we prove back to Ethereum. We prove to Ethereum that we've done the thing we've done correctly. So Ethereum can say, hey, I didn't do all that work. In fact, I don't even have the capacity to do all that work. But by means of verifying this proof, I can vouch for the fact that what happened off chain is correct. And that's basically because asking about sort of the different solutions today. It's in this proof, and how it works is how different rollups differ. We use a fraud proof mechanism, and I'm happy to get more details into that. But I've been speaking for a while, so let me pause there.
Yeah, thank you for walking us through everything. And I'm curious, Victor, given all this, why Arbitrum? What are the benefits for Hashflow?
Absolutely, yeah. There are plenty of benefits, and I think I'll at some point take a step back and explain market making on Hashflow and how these prices are possible. But philosophically, while attempted to scale Ethereum, people have tried multiple approaches, right? And you see solutions like Polygon and Avalanche and so forth that are like not really layer twos of Ethereum, but like side chains that aim to reduce some of the pain points of the users. First off, I want to say that while not being an Ethereum maximalist, I do believe there is real value in having true layer two experience where security is shared by the underlying network, the underlying layer one Ethereum, which has been battle tested like for many years, and it's proven to be resilient despite some of the hiccups that the user experience has had to suffer. And when looking at Arbitrum and look at the performance and look at the ecosystem, we've noticed really good characteristics. We've noticed blazing fast confirmation times. We've noticed that the price is being much cheaper, while not zero, being much cheaper has facilitated trades that appeal to more of the retail kind of set of traders, right? So the difference between paying $50 and $2 or $1 for a trade is huge. It can make a $100 trade profitable, whereas on Ethereum layer one you would never be able to do that. And then aside from that, I think there's a huge advantage that market makers have with these fast confirmation times. So just in a nutshell, most market makers on Hashflow operate on a hedging basis. So they would store the same, they would try to have constant supply over the DeFi venue, which is Hashflow, as well as the CeFi venue, which could be something like Coinbase. So whenever they buy something on Hashflow, say they buy Ethereum from a user, they would sell that on the CeFi venue. So in order for their algorithms to work and for their strategies to be profitable, they welcome confirmation times and they welcome finality, because it tells them when something has gone through and they're ready to hedge. So overall, I think we believe in the layer two approach. We go into the narrative of cross chain. We do think that layer twos are going to play an important role in terms of security, and it's very, very convenient for market makers to have this experience of codes that basically get executed instantly on a chain.
Yeah, no, I think that all makes sense. I definitely see the value in paying $1 or $2 for a trade versus $50. I wanted to sort of actually loop back to something you mentioned when you were first introducing Hashflow. You mentioned it was MEV resistant. MEV, for folks is depending on how you want to define it, it's minor extracted value or minor extractable value or maximal extractable value. Maybe for folks in the audience, what is MEV in your eyes, and why is Hashflow MEV resistant?
Sure. So MEV has been used in many protocols, but I think the most infamous use of MEV is the sandwich attack that happens on AMM. So essentially, MEV is the advantage of being able to order transactions, and by such ordering, you can get preferential treatment at the smart contract level, right? And then as an actor, if you understand this ordering and how it can impact you, you can actually deploy your transactions to get preferential pricing, to be able to front run, to back run other people. So in essence, in Ethereum, MEV has I think rose to fame like maybe a couple of years ago, but it's allowed people to it's allowed people to utilize slippage most of the time to their advantage. So one example of that is when you're making a trade, say on Uniswap, for a token that doesn't have a lot of liquidity, you will notice that your rate is not going to be that great. So if you trade $100 worth of that token, you're going to get a certain price. But if you trade 10,000, that price is going to be way worse. And that's because of how the smart contract works, right? Now, if other people try to compete with you on the same quote, they might be taking the better price and giving you the worst price. So that's like a very simplistic way of describing it. But essentially, order matters. And a lot of traders that have been using these protocols over time without acknowledging this problem have gotten burnt on fees and price action, right? So with Hashflow, the way we eliminate MEV is simply by not putting pricing in a smart contract level. The way Hashflow works is that market makers will be computing a quote off chain. They would be looking at their inventory across different venues, and they would be figuring out based on their market making strategy what would be a quote that, if executed, would still make their strategy profitable, right? And most of the time they do this, like I mentioned, by hedging on a centralized exchange venue, such as Binance or Coinbase, right? So once they have this price, like say a trader requests to sell 10 ETH, once they have a price for Ether they're willing to honor, say $3,000, they'll return back the quote. And that quote is exactly what's going to get executed. So if the market maker tells you that you're selling 10 Ether for $30,000, $30,000 is exactly what Hashflow is going to give back into your wallet, nothing more, nothing less. And the way we achieve this is by signing those quotes off-chain and verifying those signatures at the smart contract level, which means that if any of the parameters change, those signatures will fail. So that's our general approach to tackling MEV.
Got it. I mean, how do you think about, given that so much of this, negotiation is sort of happening off chain, like the balance of power between, takers and makers in the, Arbitrum, or sorry, in the Hashflow market, like, how do you make sure that, makers are not getting screwed? How do you make sure that, takers are not getting screwed?
For sure. Yeah. So on one side, once these quotes are frozen, right, they have an expiration time. So takers cannot just take the quote and execute it at a later point in time, like when the price moves in their favor. So these expirations are very variable, and they could pertain to things like volatility of the markets. They could pertain to things like the network itself, and this is where Arbitrum becomes very interesting. But it's kind of like a free option that you have for like a very short amount of time. And as a market maker, when you're giving that expiration, you're baking that into your pricing strategy, which means that with time, as you observe taker behavior, you can figure out what a good fee to take is in order for your strategy to be profitable. So it's all a data-driven approach. From the taker side, you get the price that is quoted to you, and you have that expiration in front of you. So you know how long the quote is available for, and you know what the quote is. So if you decide to broadcast that transaction and execute the swap, you'll get exactly what you've been promised. So there's no actual way to get screwed as a taker. I think the biggest risk is for the market maker to issue these quotes for a finite amount of time. Now, when it comes to networks like Ethereum, you cannot have a quote that expires in 10 seconds because it's very, very unlikely that you will not be able to include that in a block within 10 seconds. But for something like Arbitrum, where you get 1 or 2 second confirmations, it becomes much easier. And the interesting part here is that as you're lowering the expiration time, you're also lowering the risk for the maker. And that what that means is that the maker is able to give you tighter quotes because they don't need to account for price volatility as much, which means that in general, for the same market maker, prices on Arbitrum will generally be better than prices on Ethereum.
Yeah, that's a really good point. Basically, in addition to getting cheaper transactions, you actually get better pricing because there's going to be faster confirmations, and so you can get a tighter band in which someone's willing to quote. So you sort of save money in both directions. I guess Stephen, sort of a similar question to you. How does Arbitrum do MEV? Like Ethereum, obviously there's many tools and many systems for ordering transactions and thinking about transaction priority. How does Arbitrum handle MEV, and what are sort of the future plans there?
Yeah, thanks for asking that. It's a really good question. So Arbitrum, the MEV landscape on Arbitrum is very different than the MEV landscape on Ethereum or really other L1s in general. And it comes down to us not having a mempool. So let me just step back for 1 second, right? So MEV, is, as you mentioned, like this idea, one it's basically front running and one of the common attacks are the sandwiching attack, in which a user, you can basically get your transaction in between someone else's transaction in between yours and sandwich them in some way, or you can get before someone else's transaction. These are the basic tools that one will use to extract value via MEV. In Arbitrum, though, there is no mempool. There's no, right? So all that happens is because, hey, I send my transaction, and then some bot, let's say, sees my transaction, and it does something to try to front run my transaction and get its transaction in before mine. And then maybe it back runs as well and tries to get another transaction after mine. But in Arbitrum, there's no mempool. There's no idea. There's no like public place where you can see my transactions before it's final. So what I do is I connect directly to the sequencer and send the sequencer my transaction. So the first time that bot will see my transaction is once it's already confirmed, once the sequencer has already included it. And that's the only way the bot will see my transaction, because there is no mempool. There's no public pool of not yet included transactions, and then you can play games and trying to get them included. So already we've minimized the problem a lot. Of course, backrunning is still possible. Backrunning just means, hey, I see the sequencer approve transaction A, I'm going to try to quickly get in transaction B. But that's just sort of the network working as it should, right? You see a transaction in the network and want to do something afterwards. There's no like private data or manipulation that you're doing there. But then the question is, okay, so the bot can't go ahead and front run, but what about the sequencer themselves, right? Can the sequencer reorder transactions? Can the sequencer do things that are malicious, where the sequencer now is in a privileged position? No one else can. So we've reduced the problem from the public to the sequencer. And now the question is, what about the sequencer? And that's where the story today and the story, a little bit down the road is going to change, and I'll walk through it. Today, the sequencer is operated by us. And we basically just tell you, hey, we are not reordering transactions. We're serving transactions first come, first serve. And that is 100% true, which means that there is no opportunity for front running on Arbitrum. But admittedly, it's not it's not the level of guarantee you'd really want, right? You'd want something stronger than us telling you that we're not front running. Again, we're not. But long term, you'd really want this to be done by a protocol. So I did some work when I was at Cornell. Actually, so the history, so MEV, the term MEV was coined on a paper that I co-authored, primarily led by Phil Dayan at Cornell Tech during my time there. And then a few of us on that paper had a follow-up paper, which was called Fair Ordering Consensus, in which we said, hey, can you build a consensus mechanism that guarantees fair ordering? Okay, so your typical consensus mechanism, what it does is it wants to get to one thing, and that's agreement, right? In Bitcoin, in Ethereum, or in a typical BFT consensus, if transactions come in the order A, B, C, but we all agree to include them CBA, everyone's very, very happy, right? There's no notion of fairness. There's just notion of agreement. Consensus, how we reach consensus. And that's what typical consensus looks like. And the question we asked was, hey, can we build a consensus mechanism that incorporates the property of fairness, of input order fairness, sort of this first come, first serve property, that if the security property of the consensus mechanism holds, you're not able to sort of change the ordering. And that's a very powerful primitive, because if you can do that, you can basically have a consensus mechanism that guarantees that you can't reorder transactions meaningfully. And we've done a lot of work internally. We're also publicly working together with Chainlink on this, because Ari Jules, who was my advisor at Cornell Tech and also an author on this paper, and some subsequent work that he worked on this area, is also the chief scientist at Chainlink Labs. So there's a lot of interesting work that we've done to build these out to production level protocols, and that's our long-term plan of how we decentralize the sequencer. Right? You can decentralize the sequencer by just saying, hey, anyone can serve as a sequencer and anyone can sequence transactions, but still that doesn't really solve the problem. You need this fairness property. You need this property that the sequencer can't reorder transactions. And so together with the fact that only the sequencer can reorder transactions, and now if we go ahead and replace the sequencer itself with a distributed consensus that's fair, now nobody can reorder transactions. So what that means is, from a user perspective, there is no front running in Arbitrum, not today, not in the future. But from a guarantees perspective, how do you know? Today, that's because you have to trust us. But in the future, in the not so distant future, we'll have a protocol that actually guarantees that. I just want to clarify one thing, not to confuse anyone. the trust here is only on the order of transactions, right? We're saying we can't do anything. The sequencer can't sort of make invalid transactions go through. What the sequencer could do would be to reorder transactions. Again, we're not doing that, but the guarantees we'll get with decentralized the sequencer is you'll have a decentralized guarantee that hey, the sequencer can't reorder transactions, and then most forms of MEV will not be possible in Arbitrum. And together with like the work that Hashflow is doing, I think these things work together very, very well. And just one comment there is, I see this all the time, which is often like these good, great prices aren't available to DeFi users, right? So most people wouldn't go into DEX and just do a massive over-the-counter trade because it's just, you'll end up getting slippage. So really, the reason I'm most excited about Hashflow is because it takes a tool that's now available only to sort of off-chain or institutional investors, and really brings that to DeFi users and gives them the ability to do these large trades and not really have to worry about slippage.
Yeah, very well said. I mean, so it sounds like part of the future vision for Arbitrum is decentralizing the sequencer, so it becomes it becomes trustless, it becomes fair. What is like the end game for both of you guys? Like, what is the end game for Hashflow? What is the end game for Arbitrum? How do you sort of see yourselves getting there?
Great question. We are struggling with putting together a 6-month roadmap because the space is so dynamic and we love it and we want to be part of it. But let me try to answer a five-year roadmap question. So I think that at this particular point in time, the way I see the space moving is that I see a lot of energy trying to build Web3, and people come up with different technologies for scaling. They come up with like different apps, different types of applications, different types of UX kind of expectations and so forth. So I do believe in a multi-chain future personally, right? And I think a lot of the team does. And it's really hard to tell exactly how adoption is going to happen because, as many people can agree, we're very, very early in the adoption of these of this Web3 economy. But what I can tell is that it's becoming particularly hard to move funds and have them available, given how many projects there are. And I've experienced this firsthand because I tend to be curious about all these protocols and so forth. So I want to take this from like from two angles, I think, in terms of Hashflow. I think the first angle is how can Hashflow perform the best and give you the best prices and no MEV and really like cater to the most professional traders who just want to make a living out of this, right? And I think this is where this kind of synergy between the two projects makes a lot of sense. Where I think Steven was mentioning this as well, but we need to unleash this power of OTC trading to regular users. And there are a bunch of things that need to happen there. We've been very careful with adding liquidity to Hashflow, mostly because we do have really great capital efficiency numbers in terms of turnover rates and so forth. So we haven't been super capital hungry, but to be able to sustain $1 million trades, which I really think is something that Hashflow can do in the future, we will need to increase liquidity, but we will also need to increase the guarantees that market makers do not get severely arbed. The risk that someone is taking when they're giving a $50,000 quote is very different from what they would be taking when they were to give a $5 million quote, right? So we need to improve the protocol a little bit to allow for different types of trades, if that makes sense. However, it's really like this of things where you have really, really low expiration times that are made possible by these technologies like Arbitrum, where you can create these quotes that are no slippage. They could be really, really big ticket sizes, but due to the overall infrastructure that actually just works really well together, you can make this so that people have access to them and the market makers still maintain profitable strategies and can make markets in the future. So that's Hashflow on one chain. Also, Hashflow on one chain, I think one of the things that have been voiced, I would say criticism is that it's relatively harder for Hashflow to add long tail assets, like a new token gets listed, compared to something like a Uniswap pool that would be created. And I think that while it's relatively hard right now because the pool of market makers is somewhat limited, it's going to be very easy in the future to actually create these markets directly in DeFi. So what I think the end game would be is that we no longer need to do designated market making for projects on a CeFi listing, but you can consider projects being fully DeFi native, where their tokens exist only on DeFi, and they put their designated market makers to create those markets for their token on Hashflow directly without the existence of necessarily a Binance listing that could be harder to get for certain projects, right? So I think we want market making to be easy. We want to enable a landscape where market makers can plug in, where it's easy for projects to find market makers and so forth. And the second side of things is the multi-chain aspect, where I do imagine that Hashflow, because of its capital efficiency, because of its market maker based structure, can actually put liquidity on many, many venues and can create this kind of close to instant, like no slippage trading experience for people who are trying to just simply move their assets to use different protocols. So you're in a protocol on Moonriver, you want to change your mover for say Matic on Polygon, or like Arbitrum ETH, and that should be easy for you to do, so that you can continue surfing Web3 on no matter what infrastructure it's built on.
Hey, I guess I'm happy to talk about the long-term view of Arbitrum with respect to this and in general. I think in general, the long-term view of Arbitrum is, I guess, twofold. One is to become a part of the Ethereum stack. And what that means is, I think it's clear, and it will become clearer over time, that Ethereum is a very, as Victor mentioned before, you don't have to be an Ethereum maxi to realize the power of Ethereum. It's both the power of the technology, but equally the power of its community. The fact that innovation happens on Ethereum. The fact that you could say, I love EVM or I hate EVM, but it's so deep, and there's so much code and knowledge and integrations available in this ecosystem, and so much of the mind share is there. So we really want to become a part of that ecosystem, because the way Ethereum scales is via rollups like Arbitrum, right? You long term, we can't have users, retail users certainly, transacting and expected to transact on Ethereum mainnet itself. We have to figure out a way to scale, and Ethereum scaling solution, to quote Vitalik, is rollup centric, and Arbitrum is right out center there as one of those central rollups that are building out, the core scaling technology of Ethereum. So, our vision is to continue building that out, and in particular, so to dig out into particulars, so what do we have to keep doing? Are we done today? And the answer is absolutely not. We're not done today, and it's really only the beginning. But we know what we have to do. What we have to do is to make the user experience better and to make the fees lower. And I think Hashflow is a great example of this, right? So we know that if we make the experience faster, and it's quite fast today, and if we make the experience faster, if we make the fees lower, the inclusivity of what others are able to do becomes, really, it just includes more and becomes more and more open and more possible to do things that aren't possible elsewhere. So, Victor and team are smarter than me, and I definitely never thought of, when building the tools, never thought of, hey, if you do this, then we can build a network like Hashflow. Like, that was the innovation that they had, but we know the general tools we need to build. We know the platform that we need to build and the characteristics of what it has that will make it better for everyone and more open to more applications, right? There's never going to be an application that says, hey, I want slower confirmations, because they can always do that artificially. There's never going to be someone that says, hey, we need Arbitrum to charge higher fees, right? So clearly what we need to keep doing is to get our fees down, our fees lower, right? We're 90 to 95% cheaper than Ethereum today, and that's a great start, but we'll get cheaper. And the nice thing is we're delivering that technology as we go. We're not saying, hey, wait until we're 99% cheaper. We're saying it's 90 to 95% cheaper today, and you can use it today. And as we innovate, it will get lower and lower and lower. And also, again, with the speed, it's really about setting that environment for innovation. And Hashflow is really an absolutely perfect example of that. So coming up, we have Arbitrum Nitro, which will allow us to do that. Will increase our performance and also reduce our costs significantly. We'll have much better on-chain compression coming, as well as just cheaper layer 2 fees. So all in all, a better experience for users. But again, seamless. Users will get those benefits when they come, but they don't have to wait. They also get the benefits to today as well. They're already reaping those benefits, and when it comes 97, 98, that will just show up in their wallet as more money and more ability to do other things on Arbitrum. So that's our vision, which is continue to do what we're doing and really have a breeding ground for innovation. And thankfully, as a platform, we don't have to think about what that innovation is, but we know what our jobs are and we know how to get there. That's basically what we think about, and as well as we also always think about how do we bring more and more and more people onto Ethereum. And a part of it is exactly what I just said. Well, as you lower fees, you not only make it more inclusive for projects, you also make it more inclusive for people, because there's DeFi users, you can look and NFT users, etc. But another way you can classify is people geographically, and what's low fee for me sitting here in the US might be different than someone what's considered a low fee in a different part of the world. So really, we want to expand that pie and lower the cost for everyone, and really bring bring Ethereum to the masses. And we think that in doing so, where the way that we do that is by bringing our fees down, making the experience faster, and continuing also to educate and spread the message and work with teams. And because not everyone, as we grow to more and more users, also we'll have to have more tools available, because not everyone's going to be a Solidity developer. So how do we both capture the current market and also help educate users and bring them to the ecosystem? But the key thing underlying all this is security, right? Because we can do everything I just said by just tweaking some parameters in Ethereum, and some other alternative L1s do that, and that's an approach. But that sacrifices, in my opinion, on the security, and more importantly, on the core values of why we're here in the first place. So the nice thing about Arbitrum is delivering this to users, but keeping true to our values and keeping keeping the security, getting the Ethereum security, while also bringing it to the masses.
Very nice. Well, I am excited for the much faster, much cheaper, much more decentralized future that you guys are working on. So thanks for walking us through everything today, and very exciting stuff. I think we're going to open it up to the audience now. If anyone has any questions, feel free to raise your hand. Hey, Jonah, you have any questions for Victor or for Steven?
Hey guys, yeah, just heard about this now, looking at the docs. So seems really interesting. But yeah, excuse my ignorance just looking through the docs right now. But it kind of sounds like you've the market makers kind of create like a privatized mempool, and that's how like you avoid the MEV, because it's based on like quotes coming in. Is that right?
I wouldn't use the word mempool here, in that the mempool, the use of a mempool or not, is determined by the architecture of the specific chain that Hashflow is deployed on. The way it actually works is market makers would use a signature scheme off chain. They'd be using their own servers connected to say the Binance APIs and some of their internal booked APIs and so forth. So they'll be creating a quote that is compatible with a smart contract, and they would be signing it using a private key that is paired with a public key that's deployed with a contract. So essentially, the transaction is still sent by the trader, but it includes a signature from the market maker, and that signature is used at the execution time by the smart contract to validate that the market maker was indeed the one that generated a quote. So I wouldn't describe it as a private mempool or relayer. That being said, there are different architectures that are augmentative to this design that we're exploring to make OTC trades possible. Like for example, if you were to request a quote for $1 million at a time, and the market maker didn't want to risk too much of an arbitrage, they could theoretically be the relayers of the quote. And by doing so, they would essentially make sure that the trader accepts the quote, say, within 5 seconds to trade $5 million. And then they could broadcast that quote at their own pace, regardless of network conditions. So there are different things that we're experiencing to make more trading experiences possible. But currently, the quotes are very similar to the contract call you'd be making to Uniswap, if that makes sense.
Got it. It kind of reminds me of Connext. I don't know if you guys have looked into that before, but I did some research into Connext, and it kind of seems like a similar architecture.
We've been looking at the Connext architecture and talking to them regarding our ability to build cross-chain swaps as well. It's all kind of it's all kind of similar in that there is off-chain activity. However, the execution of the trade is fully decentralized, so it's fully trustless.
Cool. Thanks, guys.
Yeah, I'm just new to minting and all this crypto space and the rest. So I'm just asking. Arbitrum is always, yeah, I mean that people are saying Arbitrum is cheaper than Ethereum. So how do I start?
It's a little choppy, but I think he's asking how Arbitrum is different from Ethereum. So Stephen, maybe if you want to handle that one.
Sure, happy to. Our Arbitrum is built on Ethereum and secured by Ethereum. But what it does is it takes a lot of the load off of Ethereum. So we get the security of Ethereum, but we're able to reduce the footprint of Ethereum. And by doing so, we're able to get the security of Ethereum, but also scale more. We're able to pack more into what we do on Arbitrum, and therefore get more mileage for what we do on Ethereum. And if you're asking though from like a user perspective, if you have like set up your MetaMask, for example, it looks like a different chain, and you have apps on Arbitrum and apps on Ethereum. And under the hood, though, and it gives you the exact experience as a different chain, but it also gives you the exact EVM experience, right? It takes the same bytecode as Ethereum, and just about all the familiar infrastructure that you're probably familiar with on Ethereum exists on Arbitrum too, from your node providers like Alchemy, Infura, QuickNode, Anchor, to your oracles like Chainlink, to your block explorer like Etherscan, called Arbiscan and Arbitrum. So the look and feel is very familiar. It is like another network in MetaMask, but it's the developer experience and the user experience should be exactly the same as Ethereum, except in two ways. Number one, it'll be a lot cheaper, and number two, it'll be a lot faster.
Hello, good evening from my side of the globe. So it's a good thing you guys are trying to help out with the scalability of Ethereum, and I'm excited about Arbitrum. I've been following you guys for a while now. I wanted to ask, I heard you guys are going to give an airdrop. So is that still practical, or is just one of those rumors that has gone down the drain? Thank you.
Thanks for your question. Arbitrum has no native token. We accept ETH as our token, and we have not said anything about an airdrop. So whatever you heard is just rumors.
Hey, thanks for doing this AMA. I have two quick questions on the Arbitrum side. One is, I saw Nitro has been announced, and I think it's like something like a 10x improvement in scale. I'm just kind of curious what people on the Arbitrum side think, like how much runway for scale is there after that, like theoretically or over the next few years? And then the other quick question is like, is the Arbitrum team doing any research into any ZK stuff? Like I know Polygon is developing some hybrid optimistic ZK rollups.
Thanks for your questions. Yeah, both great questions. And the first one is I think there's still a lot of room for scale. Arbitrum Nitro is going to be a massive upgrade for us, but it will also be it's a very flexible platform and allows us to continue to innovate. So Arbitrum Nitro on day one is going to be incredibly awesome, and stay tuned for some very soon announcements there. That's a little bit of alpha, but I think that it's really a starting point, but it's also a platform. We'll be able to, on the Nitro stack, we'll be able to continue to innovate and continue to explore with better compression types and various other tools that we have at our disposal. And, to tie that into your second question about ZK, I think the fundamental theme here, what we're committed to is providing scale to users with the best technology available today. And we're fully convinced that the best technology available today is Arbitrum style of optimistic rollups, and that's what we're delivering to users today. Now, I can guarantee you, though, if we look back in 5 years from now and we say, hey, look at Arbitrum 5 years ago, it's going to look primitive. It's going to look primitive compared to what Arbitrum looks like then. And the reason is because the amount of really, really smart people in this space, both in the academic side as well as commercially, as well as just people that are hobbyists, is incredible. And the amount of innovation in the space is staggering. And therefore, I'm convinced, I'm positive. I don't know what it's going to be, but scaling in 5 years from now is not going to look like scaling today. And I can guarantee you that we're not sitting here patting ourselves in the back saying, hey, look, we built Arbitrum, we've shipped Arbitrum, let's go home, we're done. We're saying, hey, we've built Arbitrum, we've delivered scale to users, we're 90 to 95% cheaper to Ethereum. How do we get cheaper? How do we increase our capacity? How do we do something about state bloat? There's so much research that needs to be done around scalability. And the nice thing is, now that we've launched and been launched for several months, we're refining the engine while we're already flying. And there's obviously some complexities in doing that, but we built our stack in a way that really enables us to do that and enables us to be flexible and innovate. So will ZK be the answer in 5 years? I personally don't think so, but I can tell you that if it is, we will be there. We definitely have internal resources looking at ZK and research resources that are looking at really every angle and saying, hey, what is the best technology today to scale blockchains? And how do we implement that and include that in Arbitrum without reducing Ethereum security, and also while maintaining compatibility and a great developer and user experience. Today, we believe that Arbitrum hits that sweet spot. I'm sure that will evolve over time. My personal bet that it doesn't include ZK for quite some time, but hey, if I'm wrong, that's okay. Well, it's not a matter of ego, or we're not married to exactly what we're doing today. We're committed to delivering the best technology to users. So we will definitely continue to innovate. And I'm not a prophet, so I don't know what those developments will be. I'm sure some of them will come from us in-house. I'm sure some of them will come from the community, but we'll continue to keep on top of that and deliver them to users.
Thank you.
Definitely. Looks like that's it. So maybe we wrap here if nobody else has any questions.
Yeah, thanks for the time, guys. This was great. If people want to learn more about Hashflow and more about Arbitrum, where can they go?
For Arbitrum, we have there are a few resources. If you're a user that wants to say, hey, how can I use Arbitrum? So you can go to the bridge, and that's how you bridge funds over. That's bridge, bridge.arbitrum.io. You can also go to our portal. That's portal, portal.arbitrum.one, so .one, portal.arbitrum.one. And that's where you can find all the cool things that you could do in Arbitrum today and all the apps and infrastructure that's available to you. And there's also our developer docs, developer.offchainlabs.com, if you're a developer that wants to use Arbitrum. And also feel free to get in touch if you're a team that's looking to build an Arbitrum. You can DM us on Twitter, and you can DM me directly. We're always happy to see however we can help.
For Hashflow, if you're looking to trade and use the product, once you've bridged your money over to Arbitrum or even on Ethereum or other chains, hashflow.com. So that's .com site. And hashflow.com is going to tell you a little bit about Hashflow and also link to our trading app. And also Hashflow has an upcoming token, as well as a token reward scheme for traders and liquidity providers. And you can learn more about that at hashflow.com/token or at docs.hashflow.com. So bridge your money, come to Hashflow and start trading.
Exciting.
Awesome. Thanks, guys.
Thank you so much.
Thank you, everyone.